Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey look, today we're going to talk about my margin update. If you remember, I went on margin to buy a dividend paying fund. We were going to use margin to then buy these dividend paying funds to have those dividend paying funds pay down the debt. We were going to negotiate our margin interest rate with our brokerage, get it down as far as we can. We were then going to buy a dividend paying fund. I selected QDTE and IWMY. I'm going to show you another fund that I picked, but we went ahead and we went on margin. We wanted to make sure we had a reasonable buffer. I'm going to talk to you about the buffer I have right now, so we wouldn't get a margin call. And to bring you up to speed, we went ahead and did this the day before the market crashed. So with everybody thinking that if you go on margin and the market crashes some 21%, you would definitely think you'd get a margin call. Well, I didn't, and I didn't even come close. I left myself about $20,000 in buffer, and it fell to some $14,000, never coming close. Now, on screen, you're going to see all the numbers. And we're going to talk about a new margin trade I put on using IWMY. But last week, when I originally put this trade on, we used RDTE. We took profit in RDTE, and now we're on IWMY. I'm going to talk about these two trades individually just so you understand where we're at. So we're using margin smartly so we can buy dividend-paying funds that will pay us that weekly to monthly dividend, that will pay down our margin interest debt, and we collect free and clear shares at the end. Now, if the stock moves above your cost basis, then you could actually scalp all of those profits. But as you're going to see, I'm not in that position with my IWMY trade. We have a little bit of time. This trade is now a long haul trade. I'm going to explain it. So let's talk about our very first trade. This was back in February 28th. I went ahead and bought QDTE. Bought QDTE in the hopes that all I would do is collect that weekly dividend. It would pay down the margin debt. And we would do this week over week over week. What ended up happening, just like most every other dividend fund, this thing absolutely got wrecked right here. This is when the original correction started. Now you're saying to yourself, boy, that's some horrible timing. And you're exactly right. QDTE fell from in and around where I bought it all the way down to 32 bucks. You'd think that would trigger a margin call, but we did it smartly. I'm going to talk about the margin buffer or non-margin buying power I left myself. You cannot get greedy when you do these things. We're going to talk about it. I didn't even come close to a margin call. Now the markets rallied and then they fell again with the tariff news. Remember the tariff news? Crashed QDTE and most everything else to 28. Since then it's rallied. Since then I got out of it for two reasons. One, I really like IWMY. That's a dividend paying fund that uses the Russell 2000. I believe the Russell 2000 will move higher as the Fed starts to cut interest rates. And I believe that's going to happen in September. Also, it pays a higher dividend. But more importantly, I was down incredibly with QDTE. And you'll see on the right side of the screen, when I sold out of QDTE, I was down some $13,138. I went ahead and made the decision. I'm going to do this trade, this margin trade. I'm going to do it smartly. By buying a dividend paying fund, it's going to pay down my margin debt. And what we're going to do is hope that we can get out of our cost basis eventually, start making all that weekly dividend. QDTE was paying $300, $400, $500. Tell you what, it is a cash printing machine. We're using borrowed money to literally collect that kind of weekly dividend. Well, it didn't go my way because the markets did crash. So what I did, I sold QDTE and moved into IWMY. That did two things. One, I got in at a lower cost basis than QDTE, which means I was able to buy more shares. And IWMY pays a little bit more of a dividend than QDTE, so I was going to make more of a dividend. You can see since I've been in IWMY, I've had 2,700 shares, 3,200 shares, and now 3,500 shares. Well, I'm collecting now anywhere between $700, $800, and $900 a week. So we're paying down that margin debt quicker. Now, why else did I sell QDTE? Well, we're going to have a tremendous bill for the tax man. Even though these have a lot of return of capital, still going to have to pay the tax man. So I used a 10% pay the tax man debt that I built into the calculator. We're going to go ahead, sell QDTE for a $13,000 loss. When we buy IWMY, we avoid a wash sale, largely because I did my research. I went ahead and bought a dividend-paying fund from a different company that uses a different index, and it uses a different investment strategy than QDTE. So I was able to take that $13,000 hit as a tax harvesting for this year. So if I have taxes this year, I'll be able to use that negative $13,000 to cut some of my tax bill for this year. Now, when you take everything, we've been in this trade for 15 weeks. And 15 weeks, when we look at the gross dividends, we've collected about $9,835.66. After I pay the tax man and I pay my margin debt, we've made $8,182.58. That is free and clear money. Why is it free and clear money? It's because I paid the taxes and I paid my margin debt. Now here's the problem. I'm actually down $13,000 on my original QDTE trade. So we're going to factor all that in. And when we factor all that in, you could see to the lower right now, as it stands, you take the $13,000 loss with QDTE, then you take the $10,000 gain that I have in IWMY. By the way, that includes dividends on both sides. Right now, this entire trade after 15 weeks, having QDTE, which uses the NASDAQ to sell premium to generate that big dividend, which fell 21%. Well, we're only down $2,564. I'll tell you, if this market trades sideways to higher, we could have that paid off in 2 weeks. Now, that is a trade that we're going to keep on. This is what we're doing. We plan to do this for many, many, many weeks. Even if IWMY falls, we're in this for the long haul. Because what I want to happen is all of those fat dividends you see come in and pay down the margin debt. Because every single dividend dollar pays down my margin debt. I'm able to have at the end of all this, if I pay the tax man, I pay the margin debt, we're going to have 3,500 shares of IWMY paid for. Tell you what, we use margin smartly this way. Most important, see in the upper middle part of the screen, you see where my non-margin buying power, or what they call margin buffer, is 39%. That's right. When you do this, you really need to understand what non-margin buying power is. That's essentially what your account can fall before you get a margin call. And it's not the dividend fund. Not at all. It's your entire account. That's what people don't get. So when you see all those YouTubers talking about filling up their margin debt, not leaving themselves a buffer, what happens when the markets pull back, which they will? You're going to get a margin call. You're going to have to sell a depressed asset, or you're going to have to pump in some cash. That is not what we want. We do not want to be getting margin calls. Okay? So we want to do it what I call doing it smart. And that's what we do. I've kept a 34% margin buffer. Now you say to yourself, man, you're leaving yourself a lot of margin that you could be using. But you know what? That's perfectly fine. Because I don't get greedy and I keep my hurdles low. Because as we learn this process, as we move forward, we're getting experience. And we'll be able to increase our margin usage smartly. Now let's talk about my second margin trade. First thing I did, I negotiated my margin interest rate down. They were going to charge me some 12%, 11%, or 10%. I went in, negotiated that down. In my smart guide to using margin for dividend investing and income, I explain how to call your brokerage and try to negotiate your margin interest rate down. It's very important. 8% is a competitive rate. I use one of the biggest brokerages. So I'd have to move all my money out of the biggest brokerage with all the services that one can imagine to something like Robinhood, where I might get 6%. Well, I don't want to do that. And I'm not going to do that. So what I'm going to do is I'm going to negotiate down my margin interest rate. And I did. I got 8%. That's competitive to me. Look, 6% to 8%, that's not a deal breaker for me. So we're going to go ahead and take on a second margin trade. And that's what we do. This time we're going to use RDTE. And I go ahead. On June 6th, we buy 3,500 shares of RDTE. We collect the 30-cent dividend, pocketing about $1,052.63. We paid a tax man, we paid a margin debt. Now, the margin debt there is kind of light because it was only for a few days, but we had to pay it. That's when the bill came. Usually, margin debt payments come in once a month. And remember, you don't actually get a bill. They actually reduce your non-margin buying power because it comes in as a debit. And remember, all cash in a margin account, once you go on margin, is basically folded into the margin debt, right? You're basically taking a loan against your money if you're using money in a margin account. In the Smart Guide to Using Margin for Dividend Investing and Income, I explain all of that. Tell you what, I have like 18 chapters, and that entire guide has been written based on my experience with what I'm showing you right here. You want to get your copy. It's down below. Get it. Now, let's talk about this trade. Literally, when I put the trade on, the market's going higher. There's some good news, and yes, RDTE moves higher. So we go ahead, even though we collect the $1,052 in dividends, and we're going to hold this just like we have the other trade. That position moves some $3,893 higher. And I'm just sitting there thinking, why not take it off the board? Because it's going to pay in a 4-week to 4.5 week, $3,893. So I'm going to hold this for the next 4.5 weeks to make about $3,893, right? If I get a dividend of basically about 25 cents to 30 cents per week on 3,500 shares, well, that's what we're going to collect. I've literally been able to make this in 4 days. So what do? We sell it outright. We pay the tax man. We pay the margin debt. We're sitting there in no margin position, but we have all of that cash. So what did I do? I sent over 25% to the tax bucket. You know what I do there. I take 25% of every single profit, whether I'm going to pay that much or not, we do it because we condition ourselves to always buy a dividend paying stock. So that's what I did. I sent over 25% and I bought XDTE. I set up a different account called Tax Bucket. In that account is one thing, XDTE. I take that 25% and I buy equal shares of XDTE. That's going to pay the tax man. We keep filling it up. And oh, by the way, XDTE is going to pay me a dividend. This is incredible. Money on top of money. Now, I have a profit. What did I do? I took the other parts of that profit and I went ahead and bought more RDTE in my taxable account. That's what we do. When we have a profit, we pay the tax man and then we buy more passive income investments. And I basically gave myself a pay raise. I gave myself a pay raise in retirement. How many can say that? That's the beautiful thing about being able to sell premium, writing covered calls, selling cash secure puts, making profit, buying dividend paying funds, and you're basically giving yourself a pay raise. I absolutely love that strategy. Now, what did I do? Woke up the next day, said, hey, I love IWMY, have no problem owning it. We buy 4,500 shares using basically the same amount. This is incredible. Now, if IWMY produces that 23-cent dividend, this is going to be a $1,000 a week trade. It's going to pay down the margin debt. This is going to be a trade that just pays down the margin debt by itself. It is a turnkey trade. I have 2 of these now. 2 of these generating over $1,800 a week. Now, one of them, you know I'm down. Can't take a nickel out of that. But this one, if the stock goes sideways to higher and we're paid all of that dividend every single week, I could do exactly what I just said with RDTE. As the stock goes higher, I could actually sell the entire position, pay the tax man, then take the rest of the profit and buy another dividend paying fund. And by the way, I'd be buying YMAX right now. Love YMAX. I want to build a position with over 2,000 shares. So this is an update. And I also want to mention here I have a 50% margin buffer. It's very important to have that margin buffer where if your entire account were to start to fall, this would have to fall 50% before I get a margin call. And I keep this conservative. You're going to hear all kinds of people on YouTube talking about maxing out your margin and doing all these crazy things. Look, in the description, get your Smart Guide to Using Margin for Dividend Investing and Income. Follow me because you'll get access to this calculator. And remember, this calculator has the initial trade setup in it. So you set up your trade so you know your numbers. There's also another tab where you can actually plug in where the worst case scenario happens. and the stock falls. You can see where your non-margin buying power will be, or your margin buffer will be in a worst case scenario. Look, you need these kind of tools to help you plan so you use margin smartly when you're using it for dividend investing. Hey, look, I'm going to leave it there. In the description below, get your copy of the complete guide to using margin for dividend investing and income smartly. We're going to do it the right way. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.